Hi, I'm Ben Hunt, and I'm panicked about my conversation with Howard. I never know what he's going to say.
Nugget.
Good morning, Howard.
All right, stop wasting time. I want to get right to our guest.
Agreed.
No. What do you think? Just going to cater to what you want? This is Howie time.
I just agreed with you.
This is where people get to know us.
That is true.
So, Canute, you turned 70 today?
No, that was yesterday.
Now, how old are you?
I'm 60.
Still. So, Canute is 60. I'm 57. And we spend all day looking at T-bill rates. Is that what we do now? And 10-year yields?
Well, you do, yeah.
I have become so old. I'm like, lock it in. Lock that in. I'm tired of my Tesla losses. Not that I own Tesla.
I think age is a mindset, Howard. Don't worry about
my
your
mindset
age.
Is that I'm pure old.
Yeah, you're 27.
My mindset is no matter how old I am, I look at you and I go, it's not a bad day. So it's gorgeous here in Phoenix. We are approaching November 2022. And we finally broken the 90s. I mean, this is heaven.
This is the best time of year.
Got hockey starting at Mullet Stadium. We got season tickets, Tom and I. 5,000 seat stadium. We've got Suns tickets. Suns are starting. I can't afford to take you to those. Those are for big clients. But you can go to a Coyotes game.
Okay.
We have golf. You can't golf. Will you golf with me this year?
I will.
Yeah. Two shitty old golfers. And maybe we'll do a podcast from my golf course. Then we have...
Good idea.
The weather is spectacular.
I know.
I'm biking. I'm eating. It's good to be home. We had a small flood in Coronado. The worst thing, right? You are MacGyver. You are my MacGyver. How bad? I mean, when you hear water, there's nothing good.
Nothing makes me more anxious than water leaks in a house.
Yeah.
It is the worst.
It is the worst. Insurance was out. They're covering it.
Yeah, but still, it takes time.
Oh, my God. Ellen's there. It's just been, don't have use of the kitchen. You do not own things. Things own you.
Yep.
Anyways. Kids are good?
Absolutely. Yours too?
Amazing.
Huh.
Life is good.
Good.
We are so lucky. I mean, neither of my kids are turning out to be Trump kids, so that's a good thing.
Whew.
Yeah. For a while, I was like, who's Max going to be, Eric or the other turd? Don Jr. Right?
Oh.
And so far, so good.
Yeah.
He doesn't use Twitter, so I'm proud of the kid.
Now, that is a good thing.
Now, I know he's annoying a lot of people on Snap and other places that I hear about, but he's not on Twitter, so I don't have to hear him. And my wife and daughter think I'm funny still.
Still?
Yeah.
That's amazing.
So I live in this fantasy. You know my fantasies. I live to make smart people laugh.
Right.
Because in the fantasy world that I live in, it's the 1970s, and Johnny Carson has me on as a regular to talk about the market. Because, Johnny cared about the markets and the Dow back in 1970. And in my next fantasy world, I can't believe this isn't a part of late night talk shows, a market update where I would make Dave Letterman laugh or whoever's the hosts of today, even though I don't like any of them. Whoever would be a late night host of today. Do we know any?
No, I don't. We
This
don't
is
know
how old
any.
we are.
I know some people who know some. But,
Okay.
Yeah.
But anyway, Seth Meyers, blah, blah, blah. I would not so much be a regular, but write for them. Because I think the markets are funny because they're all about human behavior. So in a world where it's not going to happen, maybe one day I'll get teamed up with Larry David at Riviera Country Club and we'll become buddies. But the odds, low, even though I get to play at Riviera. So basically I'm left with macro people and smart people that talk about the market and making them laugh. So there's Jim O'Shaughnessy, top of the list. He giggles at half of my shit.
Yeah, I know.
And then there's this gentleman, Ben Hunt. Not to be confused with Mike Hunt,
which
is an old joke. He's Ben Hunt. There are no jokes. Ben is as solid as they come. He is also appearing for his fourth time. If I could do a show with any two people as a roundabout, as like the All In Financial podcast, it would be Jim and Ben.
Mm-hmm.
And
I agree.
Yeah, so Ben's coming on for his fourth time. We've done, 200 and...
Yeah, he was on before we actually coined it Panic with Friends. So three times as Panic, once just a few months before that.
Okay. So he's been dead on on so many topics. We'll link to the previous episodes. But today I just have just a ton of topics to talk about because the global macro winds are a-blowing. And so I want to get to these points. The SPAC market, we were here when we were making fun of it, and now there's not much to make fun of. There's just the Trump SPAC. And I was reading some articles about it, and it just made my head spin. So we're going to talk about that, how fake that is. I want him to talk, now that I don't own so much, Robinhood and Citadel, and I want to chime in on, we talk about Apple having a monopoly. I think in the RIA space, in the pipe space of wealth, Schwab has quietly, the FTC or whoever the powers that be have let Schwab just control too big a pipe, in my opinion, but I want to get his thoughts. Obviously, I want to talk about, he wrote a great piece about monetary policy in the UK pensions, which we'll lead with. He has this term called raccoons for financial creeps. And so I want to talk about some recent raccoonage. Then I want to talk about the Fed, inflation, and what would turn him bullish. So I actually have so many questions to keep myself on topic, because Ben and I could end up talking about silly things. And we'll let him do that too. So let's get Ben on the phone. I don't think he's older than us. I think he's younger than us, but we'll find out. Ben, what age are you?
I'm 58, Howard.
He's laughing before we start.
No, he's right in between.
He's a tweener. We got a tweener.
It's the perfect Price is Right, place, right? So I was listening to the intro, Howard, and I got to say, it's weird, right? Because I don't think I've ever really felt old. You know what I mean? I mean, when I was in my 30s, I'd look at somebody who was 45, much less 58, and I would think to myself, that person is objectively old. I wonder what it feels like to be old. And now that I'm that age, I don't feel any different. It's the damnedest thing, Howard. It's the damnedest thing. You would feel
different, but if, like I said, there's a guy behind you with a knife, you would just commit to death because you wouldn't get up. You wouldn't even bother getting up because you would tear so many things. It's just you'd be better off dead.
This is true. That is the major difference.
You go into the hospital system, and that's a whole nother podcast.
Yeah. The inability to heal.
It would just be like, kill me, you fight. Don't fuck this knife fight up.
Right. We have lost all of our Wolverine healing capacities.
Yes, I am not a wolf. I am a sheep.
Yeah. I got to also ask you, Howard, this is the other thing from listening to your intro. Do you really think your wife and daughter still think you're funny?
They do, man. It's a miracle.
Wow.
Here's the thing, Ben. Here's the thing. Obviously, I perform 24/7. I just call it just being Howard. I'm not trying to perform. But in the process of living my life, chaos ensues. The only way you could stay together, I think it's 27 years for me, is it's all give on her end for the complete. It's like a financial version of Larry David. I really have.
Yeah. I hear you.
I lack empathy. I'm trying to not start fights, but fights begin in and around me. And I think having the blog for so long and it just being so easy to find my blog, that the fact that my mom and my daughter and Ellen read the daily blog and are not offended.
That's pretty great.
They're not offended. Like Ellen will say, you're too full of yourself. And then I'll have to change my tone because
that's what I get. That's what I get from my kids too. Yeah.
Yeah. So those are my best editors because they keep me as real as possible.
Right on.
And going to how I feel old. This is what makes me feel old. You're so trying to keep up with the Joneses and make a name for yourself that your 20s and 30s is all about. Someone asks you, what do you do for a living? It's just a long. Here's what I do, and here's why it's important. And sadly, I've reached the age where actually I've accomplished stuff, and it would be embarrassing to talk about it. Meaning, so I finally got to the age where I could brag, and why would I brag? It's so, I'm so evolved that it's just like, how's your day? And I go, great. So my therapist would be thrilled with my behavior, and that's where I feel old, which is like, hey man, if you really want to know who I am, it's so easy to find out. Don't ask me. So I feel like that's the farthest that I've come, and that's what I think was.
Yeah, you've evolved.
I've evolved. You haven't gotten old.
You've evolved.
I like where I'm at because I'm doing stuff that doesn't have to, constantly be doing humble brags. And I think that's where my wife and daughter would come in. It's like, they've seen it. I got nothing to prove to them. What's the best thing about being your age and having kids that talk to you and living in connect? What's the best thing about being 58 that you've noticed?
Well, it's something similar, Howard, and I actually remember having this feeling when my kids were first born, and that is very little embarrasses me anymore, right? I mean, I am who I am, and I don't get embarrassed anymore. I mean, I remember pre-kids, you're trying to present an image, right? And there's something about having kids and being able to look down a family tree, and it gave me the realization that I'm not going to be embarrassed about who I am or try to put on the image or the front. So that's just grown over the years, and I would say it's very similar to what you're talking about. It's not so much kind of getting old, but it's kind of evolving that you don't care to do the humble brag. It's just I don't know. It would be inauthentic.
It'd be inauthentic, but how great? Like in your words, how great am I? So if I don't say it and you say how great I am, is that a humble brag?
No, well, you're the best, Howard. You're the best. By the way, endorsed on having me and Jim and you on a kind of a regular thing.
It would kill.
That would be pretty great.
Yeah, it would be the All Out podcast where we're just getting everything out. I have to say, because I'm function over form. That's the difference. Mm-hmm. Meaning, thank God gravel bike came along, so now I can maybe change the style of what I wear because it's just disgusting to see me in bike stuff. For other people, not me. I like it, right. But I don't have to ride by a mirror all day when I'm riding. Other people are seeing me as the mirror. But I wear white sandals and white socks and sandals on airplanes because it helps me get through. I'm not back at Crocs yet, but I'm willing to go there.
Yeah,
I'm willing to go. So I'm function over form. And speaking of function over form, the thing that bugs me the most about the first topic, which is the Trump SPAC, mm-hmm. and then you riff on what I think. He has the ability to take a layup, because Trump doing a SPAC is genius. Because he has the ability to take a layup and turn it into a loss, not just like a missed layup. So and reading what I read in the Washington Post about this SPAC, now there's a whistleblower, and everybody's a whistleblower when it comes to Fat Nixon, is 90% of the SPAC was not enough for this fucking nut job. And then his family was calling for equity. So why, of all the things that people should read that are his fans, the greed and the ability to turn a layup into a complete disaster is exactly why we don't want to be around this guy. He's so un-American in that Americans are comeback stories, and his story always seems to be grabbing defeat from victory. And so this story is so repulsive because if 1% of it is true, and I do believe the 90%, how is not 90% of a company not enough?
That was amazing, and it reminded me, Howard, and this, I don't know if you and I have talked about this before, but the financial industry, at mm-hmm. least kind of on the buy side, right? The hedge fund side, the asset manager side, it's like the mob. Mm-hmm. And what I mean by that is that you always have to kick up to the guy above you.
Yeah.
Right, and that's the way where you're an analyst. You're kicking up essentially economics to the PM. You're the PM. You're kicking up economics to the head of the firm. It is such a mob mentality. And my favorite story in that regard, right, is similar to Goodfellas. So if you remember Goodfellas, mm-hmm. right, the Robert De Niro character, he masterminds the big Lufthansa heist. Mm-hmm. And it's an idea given to him by Ray Liotta, the Ray Liotta character.
Mm-hmm. And it took him a while to trust Ray Liotta on that.
Took him a while, but so De Niro and his crew carry out the heist. Liotta wants nothing to do with the actual heist. And then when it comes time to divvy up the money, Liotta says, no, I don't want to get a cut. Because he knew what was coming. And what was coming, of course, was that after the height, De Niro whacks the rest of the crew.
Right. Got to tie up loose ends.
Exactly. And the ones who kept asking for more of the money, they're the ones who get whacked first. And I'll never forget this in my career, right? It was in 2007 going into 08, and the guy who ran the firm I was working at, or he was running the long only book, large cap. And I guess probably 30% of the portfolio was in financials. All the shit that's about to get destroyed, right? So E-Trade, Fannie Mae, I mean, you name it, Bear Street, you name it, he owned it. And so I was kind of working for this little hedge fund part of the firm, and so we sat down one afternoon, so I just laid out for him what was going on. It was subprime, and what was a CDO, and what was a CDO squared, and what all these financial companies were doing. And over the next week, he sold out almost all of it. He just blew it out. He blew it out, and it saved that fund. I think it was like $4 billion or something like that. It saved it. And even then, when it kind of came at the end of the year, when I knew enough, right? And this is the Goodfellas story. I didn't ask for anything from the guy, right? But the good thing, because I didn't ask for anything from the guy, I didn't get whacked. But it made me a made man, right? Too, because I had done the work. I'd kicked up to him, saved that fund really, and I didn't push for the credit and the money that came with it. Mm-hmm. So anyway, where I'm going with all this, coming back to the Trump SPAC, is that he's like this comedic version of the mob, right? the mobster who isn't satisfied with 90%, but wants, you need to kick up to my wife, give some of the shares, you're the founder, give some of the shares to my wife. It's never enough, and that's true for Wall Street, and is true on the buy side. It's never enough for these guys, but he's just this caricature of this aspect of it's not enough just to kick up to him. He wants it all, and it does, as you say, snatch defeat from the jaws of victory. Because this should have been a $1 billion layup, easy
layup. Well, and maybe he pulled out already. I don't know how legally he would, but what he's turned this into is a shit show. The layup of layup. This is a financial layup that all you have to do is follow a few rules. And he had beat the system. The SPAC was like at $150. Forget it that it needed to be at $150. It is on the verge of being just a walk away. And that just seems impossible. This was built for him to pull off. And it still wasn't enough. And he didn't even tell his kids about it because they were calling into this poor bastard. Or idiot. The guy deserves everything he got into business. Yeah, like
for sure.
It's a comedy all around. The kids are calling it. So Trump didn't even tell his kids about the scam.
Yeah, the kids are calling. They want a handout too. They want a piece of the action.
People should read this whistleblower account. It is the most fascinating but obvious endings.
Well, there are a couple pieces of this that I'm still really curious to see how it comes out, Howard. The first is who's in the pipe.
Yeah, well,
right. Right, who's in the pipe that was going to come in with this with $1 billion or stuff?
Right.
Because what the article also lays out is that early on, the guy, what's his name, who's running Digital World, who's the SPAC sponsor.
Right.
Right. He comes in and he puts $8 million in to Trump Media Group. And even, the whistleblower and the other, founders here are saying, where's this $8 million coming from?
Right. It came from some LLCs, like
some LLC, I know you've done this, Howard. I've done it. We've raised money. We've done securities. You know what it's like where you have to KYC. You have to know your clients. You have to know who's putting money into your private placement.
Yeah.
And anyway, there's just so many red flags that come up from that story that might not be immediately obvious to people who haven't been immersed in this world. But when you see things like some LLC puts, crypto and, into the $8 million worth of crypto into the company. It's like, what the hell are you doing, people?
Yeah. I picture it as like raccoons come around garbage, and I look at the DWAC SPAC as just like a fucking landfill, and it's just raccoons everywhere.
Right.
It's just a raccoon-filled landfill. And what do you think the final thing is? It just they won't get the votes and it'll shut down? What's the gut? Or it just somehow just trades forever?
I think that's exactly the gut. I mean, I don't see how the SPAC can get approved at all, which means to save face, it'll just stay, Trump media will just stay a private company. And, the former guy will talk a lot about, all the amazing things he's going to do with it, with he and Devin Nunes and Kash Patel and all these other dudes, and it'll
a zero.
It'll just fade into obscurity, and it's an absolute zero. It's an absolute zero.
90%. This is like the guy half the country voted for. I mean, again, I always laugh when people say he got more votes. I'm like, if voting was based on, all right, you got 5 choices on each side, and we're going to add up the votes of all 5, everybody gets to put in 5 people. And they added up the votes on both sides of the 5 people, Trump would end up at the lowest vote count. As long as people knew they were going to vote Republican, and you gave them 5 rando names to choose, Trump would still be lowest on the Republican side. And that's what makes me laugh about people that say he got the choices between a dead person and Trump. Of course, you're going to get a lot of votes. And this is such a grotesque microcosm of what this person is like, to snatch defeat from victory when he owned 90% of the thing, and it was a layup. So
I remember back in the day, when I was running my fund, we'd get the red herrings. You get the prospectuses for an offering, debt, equity, that kind of stuff. And I remember a couple of these debt offerings. They'd get from the Trump boys. This was around the Atlantic City stuff, and it was a running joke in our office. I mean, what idiot would give money to this organization? Because that's what it was. It was a joke. It was a running joke in our world of, hedge funds and finance. It was a running joke. And I still can't get over it. I just still can't get over it.
Yeah. So let's move on. But that is who we're dealing with, you and I. Like, in the end, we're trying to do good work and rise above the noise. And, raccoons everywhere. It's late 2022. We've had the first, I think, inklings of a systematic problem, so far contained to the UK. It's going to keep UK kind of focused on internally, which is negative for the global markets. This UK pension thing, you've written deeply about this monetary policy. Let's walk through how this happened.
Sure. So there are 2 root issues here, right? The first is what the U.S., what the Fed is doing with interest rates. And I understand why we are repricing interest rates globally around the world. I understand why our Fed believes it needs to be, as they say, front-loading these interest rate hikes. I get that Jay Powell's disaster scenario is to go down in history as the guy who let inflation out of the bottle and couldn't get it back in. I get all that. And the fact is that when the U.S. does this, our dollar, our interest rates, it becomes a wrecking ball throughout the rest of the world. Correct. An absolute wrecking ball.
It's like 10 for 10 when the dollar does what it's doing. Forgetting rates for a moment, but rates, dollars following rates here is when the dollar spikes like this, global crisis ensues, financial crisis.
Exactly, somewhere. Especially in a global inflationary world. Because when the dollar goes higher, you're on the other end of that, like you're the UK, you are now importing inflation, right? Every American good and service is going to cost more. And even more importantly, because global energy is priced in dollars, you're importing inflation there. I mean, UK is not as bad off as some other countries because of North Sea, et cetera, but it's pretty bad.
Yep.
It's pretty bad, right? So That's problem number one. Problem number two for the UK is that, let's face it, they're not a great power anymore. And where that manifests itself for these UK pension funds is that they've got a lot of pensioners with a lot of liabilities. They've got $1.6, $1.8 trillion worth of assets to invest, but they gotta buy something in their own currency that has that kind of long-term duration. Right? I mean, I'm not saying anything that anybody doesn't understand. I've got a big payout I've got to make over the next 30 years. I need an investment, a liquid investment for the next 30 years. And so what does that mean? It means, I need to buy government bonds. That's the go-to investment for any pension fund with these long-term liabilities. I need a long-term asset. What is that? It's a 30-year, I'll use gilt, right? So, we call them treasuries here, they call them gilts over there, right? So you're buying these 30-year government bonds in the UK. The problem is there's not enough of them. There's not enough of these long-term bonds. So you have every pension fund fighting over itself, trying to own these long-term assets. There's not enough of them.
And in doing so, they drove rates down.
That's right. Right? So you're buying more of them. So, you're bidding up the price. So you're artificially depressing the interest rate. That's a big part of this. And you've been in a world, you're a pension fund manager where the last 30 years, interest rates continue to go down. You're buying this shit and it keeps interest rates down even more. And as interest rates go down, your liabilities go up. That's just the math. That's just the math. So enter Wall Street, or in this case, pension fund consultants, and they have, of course, a solution. And the solution is LDI, liability-driven investment, which is a $10 phrase, and all it means is we're going to put on a hedge. We're going to put on a hedge against interest rates continuing to go down. So how do you set up a hedge? So you buy a swap, an interest rate swap, which is just it's a bet. Mm-hmm. A swap is a bet.
Which in the end becomes a hope.
Well, of course.
This bet is a hope that rates continue to, because you're paying the premium, so you're actually now hoping that rates go down or betting that rates stay down.
Yeah, and it's even, in the case of these pension funds, it's even a little worse than that, Howard, because the way it gets sold to them is, no, you're not going to pay a premium. You're not going to buy an option, right, or what we call a swaption, right? You're not going to pay any premium. What you're going to do is you're just going to make a bet with the bookie, the bank, and look, if interest rates go up a little bit, that's okay because your long-term liabilities will go down. You've got enough cash to cover it. Look, I can prove it to you. Look at the last 30 years. In the last 30 years, this strategy would absolutely work. You absolutely make money with it because you're not paying premium. You're not buying the asset. You're just setting up the bet. And what that allows you to do is that the money you would otherwise use to pay for premium, to buy an asset, you go invest it. You go do invest like you always want to do, like, your private equity funds, your other stuff that's going to tie up the cash. You're leveraging, you're using borrowed money not to buy or pay premium on this bet, but just to set the bet up and just to settle it every day. And here's the problem. You settle it every day.
Okay, so the every day is the real problem.
It's a margin call.
Yep.
Right? It's a margin call because when something happens that hasn't happened in the last 30 years, like the U.S. raises its interest rate so dramatically.
Not just raises it, but then tips its hat that it's going to keep doing it, which is even more dangerous. It's almost as like they're fucking the UK. It's almost as if someone's advising... It's almost as if the banks are advising Powell that they should do this so they could just wipe out the UK. It's like they're imploding themselves.
But those bets, that kind of happens, right? But sure then you get into the problem where, oops, the pension funds can't make the margin call. Mm-hmm. And that's what happened. They couldn't make the margin call. And that's when they went to the Bank of England, and the Bank of England said, okay, we'll help you out. We'll be the buyer of last resort. And look, that's what central banks are there to do. That's what they should do.
Yeah, so one thing I guess they're there to do, other than battle inflation. But yep,
well,
keep going.
That's right. They're there to do two things. They're there to shape the price of money, interest rates. And the other thing they're there to do is to be that buyer of last resort.
Correct.
So, then to pour, as the Brits would say, petrol onto the fire, you had this cockamamie, I don't know, sub-Reagan scheme that I guess kind of might have looked good in the 1980s, that Truss and Kwarteng came out to do unfunded tax cuts. And I got news for everybody, right? An unfunded tax cuts, it's just a wealth transfer. That's all it is. That's all it is.
And so their conservative government quickly tried to do that last month or something.
Yeah. So that was the straw. Well, not the straw. I mean, that was that was the
catalyst.
Yeah, grenade you're going to put into this, and that's when they couldn't make the margin calls, and that's when the Bank of England had to step in and just buy all this shit.
Yeah.
So that's what they've done, right? And now the government's reversed the positions. I don't think Truss, can last another week or two as prime minister. Whatever. I don't care. But the core issue here is the same, Howard. The Fed's not slowing down. It's creating these not solvency crises, but liquidity crises. And we got to get the distinction clear with everybody. But that's what it means when something breaks. It's when you can't make a margin call, when you can't pay your pensioners, when you're out of cash for a bill that's due today. That's what breaks the world. And
can that spread to the U.S., I guess is the next question. So where are the U.S. pensions set? It can spread, but from what I've read so far, we're not supposed to be doing the same stuff as UK was allowed to do. UK pensioners were allowed to do.
So that is true. That is true. So the outright bet that the UK pension funds were making, because the 30-year gilt market is so thin, U.S. pension funds don't have to make that bet. They don't have to do an interest rate swap. They can do a slightly less dangerous Wall Street concoction. Seriously, that's what they're doing. The underlying problem is the same.
They all were battling low interest rates.
They're all battling low interest rates. Every pension fund manager has to report to his or her board quarterly on what their funding ratio is. That's what you get fired over if you've been a pension fund manager over the last 20 years. How's your funding ratio? And so they've all taken these very short-term leveraged bets in order to address these very long-term management issues. It's another variation on the same thing that broke the world in 2008, which is borrowing short and lending long. Because when you borrow short-term, when you use leverage short-term, and then that money freezes up, that's when you don't have money. You can't fund yourself. And that's what kills banks. That's what kills hedge funds. That's what kills pension funds. That's what kills households. Exactly.
Yeah.
If you can't fund yourself, and that's what we mean by a liquidity crisis, then you are dead. You can be insolvent. You're a bank. You can be insolvent forever. You're a pension fund. You can be underfunded forever. Right? It's always in the future, and you can always continue to kick that can down the road. But what you can't be illiquid for a second. And it's going to happen here, Howard. It's not going to be the same set of catalysts.
Of course not. Can we speculate on what you think it is, and then I'll speculate on mine? Can you speculate? For me, the pensions here got over-allocated to private. I don't know what percentage, and that's going to stay illiquid, and the returns are going to compress. So that's a problem in my industry that I don't know if it's the tinder that lights the whole thing on fire, but they're overexposed to 15 years of low rates and chasing. At least here you could chase software and Dries. So all these pensions are allocated to these big funds like Tiger, et cetera. So that's the first problem. What they thought their future returns are going to be in the high 20s could be negative for years to come because the IPO market's going to stay shut. So that's my thought. It's where it'll look like 2021 is there's just too much supply. So we've got to work through the supply, which means growth, at least growth returns are going to be muted because what the blockchain will bring is just smaller, more profitable businesses that don't need to go public. In the world that I believe the blockchain's going, the real use of Web3 is helping small businesses that didn't like churn and because you had monthly subscriptions, can build a lifetime value of something. And the whole goal of everybody trying to build their next business without having the overlord of Apple, Google, and Amazon. So when everybody finally gets blockchain right, it'll be for the right reasons, which is how do I not build a business that Apple or Google or Amazon are my landlords? Like that's what luckily the blockchain offers. Not quite yet at scale, and maybe never at scale for what a true Apple competitor or the next trillion-dollar company is. So in a world where I see that happening, which means venture returns get muted because climate is not big enough. It's important enough, but money's going there, and nuclear is so far away. Even though it's right. So if rates stay high and returns are muted, the pensions are full up of private. So that'll help ease supply 6-7 years out, and a new growth cycle will return, but it's going to take time. So where else is their problem? So that's my view of one of their problems. Where's the biggest problem? Okay, no one's talking about what I'm talking about because it affects my business, and I see it. I just see it.
What you're describing is the problem. For pension funds. No, it absolutely is, which is that the return projections over which all these trillions of dollars are going to the privates, the spreadsheet is wrong. What that means is, I'll use you talk about with banks, you talk about price to book, right? And so what we're saying is that the book, the assets of these pension funds in this case, the book is bad. Right, you can't believe the book.
Yep.
Now, but here's the thing, Howard. That's a solvency question. Like you say, that's however many years down the road, this gets realized and what was going to be a 20% projected IRR ends up, like say, being negative.
Fuck IRR, DPI. What was going to be cash back?
Exactly.
They got out of Uber and Airbnb, but those next ones they may not even see the cash back.
Absolutely, you don't even get the cash. Exactly.
Yeah.
So that gets realized. But that gets realized over like a decade.
Yes. Sorry,
right?
It's not going to happen tomorrow.
That's right. So that's a solvency question. We can all agree that's not a crisis.
Correct.
The crisis is this.
It's a crisis for my industry.
I hear you. It's a crisis for the business model for the people in your industry.
Correct.
Okay? It's a crisis for the business model, and that's where I'm going with this. Where has that business model, where have those promises, where have those return projections been built into a marketable security?
Uh-oh.
That's what everyone needs to be looking at. So whether that's a CLO, right? I mean, this is at the core, a CLO.
Oh, CLO. Sorry.
Right. Yeah. So that's on the loan side, right? Mm-hmm. There's CDOs. There are all these instruments that have been built to market, that have been turned into securities, so that you can lever them up and so you can use them as a bet. Mm-hmm. Because when this is the trade-off between that Wall Street tries to sell you on. Yes, you can use leverage, but if you use leverage, it has to be a marketable security.
Because we need day-to-day marks.
Exactly. So you got to market to market, and that's what kills you. Leverage on marketable securities. If you keep these loans or these obligations on your balance sheet and you don't market them, you say, oh, we're just going to hold to maturity, you don't have to value them. You can extend and pretend.
I like the extend and pretend.
Right, you extend and pretend. But when you turn them into a marketable security, like we did mortgages leading up to the 2008 debacle, when you turn them into marketable securities and you put leverage on them, that's what breaks the world. So what you got to look for are the spots in the world where these long-term return projections, all of this stuff has been turned into a marketable security. That's where the crisis is going to come from as interest rates go up around the world.
Yeah. So something's going to break because, like you said, dollar denominated, everybody's paying us back with, it's great to be an American until something happens here because everybody's paying us.
So the immediate place where something's going to break is going to be outside of the U.S. Mm-hmm. And frankly, when something big enough breaks, then the Fed pivots, I guess that's the word we're supposed to use.
Yeah.
Then, they start cutting interest rates. There's going to be a hellacious rally. I actually think 2023, I really do think you're going to have just at some point just a ferocious bull rally.
Sucker rally, right.
Yeah, well, I don't even know how much of a sucker rally it is either. It's not a bear market bounce. Ultimately, though, you're asking, what brings the crisis over here? What brings the crisis over here is if the dollar breaks. If you lose confidence in the dollar, if the bond vigilantes come to the United States the way they came to the UK, then that's what breaks all of this.
Oh, so just what? Because I don't now. You've lost me. So if the dollar, you mean, but the dollar is going to break. It's just a question of how. How can the dollar keep screaming higher?
The how for me is the 2024 election.
Oh, okay.
And
so that's why we could get a rally in 2023.
Exactly.
Got it.
Exactly.
No matter who wins this election, you're saying.
Yeah, I think that no matter who wins, the other side won't accept it as legitimate.
Got it.
I mean, if Trump wins, would you accept that as legitimate?
You mean Republican? We're talking about the midterms.
No. I'm talking about 2024.
Oh, I don't know. If Trump wins, like I'm a sucker. I can't think that far ahead. I just can't imagine that's our best choice in 2024.
No, of course it's not our best choice.
I'm an idiot.
It'd be an unmitigated disaster. And the only way I can imagine that happens, right, is if we get some, between vote suppression and changing the electoral rules in Pennsylvania and Arizona and Wisconsin and some other places, that's the only path I can see that happening.
Yeah, as someone who's not political, I'm seeing the Arizona ads. Canute, are you seeing them? It's fucking bananas.
It is crazy.
The local
ads. Bananas.
I didn't know, Arizona's never been that place, but it's a swing something because I'm seeing crazy ads from Lake. This woman is psycho. And not that they're all not crazy, but this one, what's her name, won't even debate her, and she shouldn't debate her.
But Howard, all I'm saying is whoever wins in 2024, the other side already believes that this election is illegitimate.
Like this podcast, I think this is fake. I object to this podcast. I object to everything you've said. I may not even air it. This is so good. So the dollar eventually breaks. You're right. I will not go short here. I am buying T-bills because I'm 57. I don't advise other people to do it. And at some point, I'd actually would think instead of shorting the market, I would buy T-bills as my trade 10 years because those things should explode in value if this rally happens next year.
Absolutely.
Yeah. So that is my way of getting paid, at least an interest rate as an old man. And if the trade that you're talking about happens, I don't have to buy FANG and software stocks. I own enough of them. I'm trying to find a diversified way to say that that the Fed will pivot somehow. The pain will show up somewhere that forces the Fed to pivot. Yeah. If not at home.
Yeah. I don't think it happens in the U.S. I think it happens.
I don't think we can make them change because they're battling what they say. I think it'll be a problem somewhere else because of the dollar. Yeah.
Absolutely.
All right, so
then I think you get a big rally, but then ultimately I think you've got a real political problem here in the U.S. that cracks the dollar, and then I don't know where you hide then, Howard. I don't know.
Right, because I don't like Bitcoin maximalists. I don't like Jack. I don't like anybody who's a Bitcoin maximalist. I don't like any maximalist. Right?
I don't either. And yet, when I think about it, I think I kind of, doesn't Bitcoin work in that scenario? It kind of does.
Oh, it works, but not enough for me to trust putting 50% of my assets in it like I do cash.
Oh my God! No. Please, yeah, absolutely right.
So like you said, the options aren't great. People have to be on their toes. this is a time you pay for advice. This is like a time where everybody's saying, oh, I'm cutting out costs. And this is an absolute time you pay for conciliary and you think. And you really be thoughtful about how you're allocating and trust your instincts. People have to trust their instincts, not be sheep. So you have to pay for that to get advice that complements your instincts. So, all right, so we've covered UK pension, US pension, Trump.
Yeah.
I want to talk about, you were one of those guys that said inflation wouldn't be transitory. How do inflation showing up to a guy like me, but I'm not the person, it's showing up to me in like business class flights. Like I'm okay with not flying business class if I like premium, like I can make up things for my 8 hours of time that say, you know what, I'm rich enough to do it, but I can't pay that price. Right. For people that can't, how do we battle, like where does inflation break? Or are we just too deglobalizing right now and it's just something we got to live with?
Yeah, we're going to, so yes.
And congrats, so, you were one of the people, I'm lucky I read you, you were just like, yeah, everybody was saying transitory, and last year you were like, this ain't transitory.
Not a chance. And the reason it's not transitory is that it is now embedded in what we expect to happen. It's embedded if you're a worker, it's embedded if you're a corporate manager. You now know that you can ask for and you can get a price increase in your product, a price increase in your labor. And the only way to break that is to, A, create a 30% national decline in home prices, and B,
that may happen on its own quickly.
Well, it's right. And yeah. B, get the unemployment rate up to like 7 or 8%. Mm-hmm. That's how you break it. And if the Fed engineers that without reversing course because they break something in the rest of the world, you know, inflation can absolutely go back to that 2-3% level, right? Mm-hmm. Anything other than that, you know, the Fed says, "Oh my God, you know, we're destroying the world, so we're going to pivot before you break the expectations that you can get away with higher prices." Mm-hmm. You know, we're going back to a world where your baseline for inflation is 5.5%.
Yeah.
And that's a world that can work. It's just a world that is so freaking different from the world we've been living in for the last 20 years.
Yeah, yeah. You can still have a bubble. We had the bubble in 99 with rates at 4 or 5%. So it's not that you can't have a bubble. It'll be much narrower.
Right.
And that's what people have to understand, and they'll have to be better. You know, it won't just be everything going up.
It won't be everything going up, and you won't be able to, if you're a company, you'll actually have to invest money.
Correct.
You'll have to actually take risks. Yeah. Right? You'll have to actually build a factory. You'll have to actually hire people. You'll actually have to, you know, do something inventive with your money instead of, you know, levering up and buying back stock. Right? Yeah. Those days will be gone. Yeah, and I think ultimately that's a much more productive, healthy. I'm very bullish about that, right? If we can avoid the political crack up and if we can avoid breaking the world in the meantime. It's getting from here to there and people readjusting what they think is right and normal. You know, it's just harder to see how we get from here to there without everything breaking up. That's the issue.
Yeah, that's what's keeping me out of taking high risk. This is why I'm demanding lower prices for everything I pay, that I have control over. Anything where I can control the cap table, I'm like, guys, this is how I see the world. You know, good luck. For 10 years of my work, this is what we value our work at.
Yep.
And I think those that aren't vigilant right now are going to be sorry. This is what is called about being a professional, not just an allocator. So you've covered actually one of my big questions, what would make you a little bit more bullish? And you're just saying your gut is something breaks that forces a pivot, which is just, I think at this point, common sense that it might happen. And so you're prepared for a rally, but probably for the wrong reasons.
That's right.
So that gives me a couple more topics that we have time to cover. Is Citadel as evil as everybody says? Should we care about their take rate? in a world that we live in today?
Should we care? Yeah, of course we should care. Right? It's Citadel makes the rules. They're the referees and they make the rules. Right? So hats off to them. I'm serious about that when you realize that you can make so much more money with so much less effort and risk by being a market maker than you ever can as being, actually
taking risks.
Actually taking risks. Right?
Yeah.
It's exactly what I'm talking about, that everybody's going to be forced to take more real world risk. And when, interest rates are normalized and inflation runs at 5.5%, when that's the normal, which is the normal, right? The issue isn't that this is some new normal. This is the old normal we're talking about. The issue is we've been living in 30 years of la-la land and 12 years of insane land.
Well, the cloud, it's not a defense. It's just obvious now in hindsight, and it was a trick that many VCs believed would carry on, and now we're getting doubt. The cloud was a beautiful thing. You took everything that was in a storage, imagine all the paper out of the world, and put it in the cloud. And then I think the mistake about betting on the cloud, or the hiccup, is that 3 companies would control the cloud.
Exactly.
Yeah. So, Amazon, Google, Microsoft, and in a way Apple control the cloud to the point where what we thought was a FANG isn't a FANG. It's just those 4 companies, whatever acronym it is, and they're bigger, and they're going to come out of this recession stronger and Absolutely. Dare say more evil.
And it's the same with markets, right? You've got 3 companies, 2, arguably 3 or 4 that control all the flow, right? And
so Citadel, who else?
Virtu, right? And
Virtu.
You can make an argument that you got some of the, J.P. Morgan.
Correct.
Yeah,
they're stronger than ever, Goldman and J.P. in the sense that they're not as levered.
Absolutely, right? So you've also got 4 companies that control all the flow. And this is the thing that people don't get about Wall Street and markets in general. The real money is not in price, right? The real money is not in buying something cheap and selling it at a higher price. The real money is in flow, in being that market maker, that person that stands on each side of a transaction and just takes a little bit out of every transaction. The money is in the flow. And
now the cloud is just one other big place.
Another place for flow. Another place
to control the flow.
It's always about the flow.
Yeah. So I give credit to the edge people that believe if they could speak clearly, and they don't because they're all scamsters. For 99% are scamsters. Is that the blockchain was a chance, and it still is, a huge chance to break the flow because it's compute. It's every node, could help us dethrone tech giants like Apple and Google. No one's really digging into really understanding it. I just, as someone, I have to learn this stuff now because first of all, it's easier to use. I can use the code. I can build my own company on the blockchain. I'm doing all these things to immerse myself finally because I have to. I didn't have to do it 3 years ago, but now I have to survive. And what I'm seeing, as I mentioned earlier, is there's a million ways to survive on the blockchain, just not yet at scale.
Right.
Meaning we're going to be stuck with this is what I want to tell people. We are going to be stuck with Citadel, Goldman, J.P. Morgan, Amazon, Apple, Google, Microsoft for a very long time. For the sins that we made believing that they would do no evil.
Yeah.
And they're pretty good overlords compared to overlords of old.
Yeah.
You know what I mean?
Yeah, I do know what you mean. I know exactly what you mean, right?
But I'm starting to hate them because I see the creep.
They're smiley face overlords.
Yeah, they're smiley face overlord, but the creep is real this time. The creep is affecting people like me because they're the reason why returns will shrink.
100%. 100%. Look, I'm like you. I mean, I'm interested in Web3. I'm interested in Urbit. I'm interested in all these ways of kind of writing new protocols so that the gatekeepers aren't, the same 4 companies forever and ever. Amen. But man, it's going to be a hard row to hoe, like you say, because as soon as any of these efforts does get a little bit of scale, they're just going to buy them up.
Yep.
They'll pay whatever price because it's worth any price to keep this sort of oligopoly on flow.
Right. Like at one sense, I want Apple and Google to have a NFT crypto wallet because then I can get customers. Right. But they don't need to launch their own wallet till there's 10 million users. So they're in the perfect spot. Like Warren Buffett says he doesn't care about Bitcoin because he has the Bitcoin option bet in Apple.
Exactly.
Because he has a scale Bitcoin bet in owning Apple. Because it'll be interesting when Apple has to do it, and they don't have to do it till there's enough users. It's a perfect catch-22. Anyways, it's evil genius. They're in a.
It is.
Yeah.
It's evil genius. It's the opposite of where we started this conversation of evil stupidity. I mean, it's the smart mob bosses. Right? Not the dumbass mob bosses like Trump and the SPAC situation.
It's such a good way to kind of like bring it full circle. You're right. There's going to be lots of scams, and we've seen it in Web3 and crypto.
Absolutely.
And SPACs. Doesn't mean they're all bad, but it means people know that there's a great chance dumb mob bosses can get away with stuff. But while all these dumb mob bosses are doing that, I probably lump the SEC in there because there's just so many leaks that they can't cover, that the smart overlords are just going to continue to creep. Like Apple's offering high yield. We hated the confetti and want to take down Robinhood, and people are allowed to think what they want, and Robinhood made their own destiny short term with the mistakes.
Yep.
We're hating the wrong people.
Absolutely. Amen.
Yeah. Like for 20 years I've spent in fintech, and it's sad. I've done well, but do I really have that much to show for it if in the end we're still Goldman, JP Morgan, exactly. and Citadel. And it is really kind of sad. And so the smart overlords are going to have to be attacked in a much more organized way, and for a much more, prolonged, thing. So I'm really bullish on returns if people structure deals properly. But the other thing that I'm nervous about is the founders have all this wrong education. So we went from this place in 2006, 2005 when I started, where founders were getting screwed, to somehow in 2022, founders believed, it's okay if I own 90% of my company. Look at it, worked for Trump. Well, Trump might have blown that for them, but you know what I mean? Founders decided that investors shouldn't get any piece of the pie. And so there's a lot of re-education that has to happen for this new world to work, which is, part of my daily missionary job. It's not fun re-educating people.
Absolutely right. It's the it's the difference. What was it?